President Biden is looking to give a fresh boost to the economy with his new jobs and families plans. President Biden wants to add funding to schools, businesses, infrastructure, and social services. Combined, both efforts would cost trillions of dollars. In order to pay for this, President Biden has proposed a plan to raise taxes on the country's top income earners and corporations. CBS News took a closer look at that plan. Joining me now is MoneyWatch reporter Stephen Gandel. Stephen, welcome. Great to have you with us. So you have some reporting specifically on how CEOs fared financially during the pandemic, as so many Americans faced financial fallout. Talk to us about the CEO paychecks and why they often personally did not take a hit like many of their profit margins did.
Yes, CEO paychecks generally went up last year, even in industries like cruise lines and hotels and restaurants that were hurt the worst by the coronavirus pandemic. And the reason is that what I found in my reporting was that the watchdogs, the corporate boards that are supposed to decide what these CEOs get paid and what's fair, they didn't really do their job last year. They made excuses. We have found the instance of Yum Brands saying that, well, it was unfair for their CEO's paycheck to go down just because of the pandemic. Well, there was a lot that was unfair about the pandemic. That's what critics told us. And the workers didn't cause the pandemic either, and yet many of them lost their jobs. So that's one part of it. Another part is that there's a long-term trend, and there has been, to tie CEO pay to the stock price. And companies often pay their CEOs a little bit of cash and a lot of stock. And generally, that's supposed to work. When a company does well, its stock price goes up. But then you have weird years like last year, where the stock market went up, but the economy took a big hit from the coronavirus pandemic. And so you had this disconnect, and you had the same disconnect with pay, that we saw that companies didn't perform very well, but their CEO paychecks went up.
Okay, and then let's talk for a minute about real estate, because that's another very interesting, subject. Housing prices are the highest they've been in 15 years. What is behind that? Is this more than just urban flight linked to COVID? And what does that mean for the economy? It's good, I guess, for the sellers, but it's hard for young people trying to get in on that, their first home, right?
Yes. And that's been a problem for the housing market, the first-time buyers. But what higher housing prices follow the economy, they follow jobs. That's generally why housing prices go up. And so with the stimulus bill from Washington, with the fact that the economy is going to reopen very soon, it's not surprising that housing prices would go up. And people selling right now are anticipating more and more demand, and so they're going to ask more. On the margins, the movement helps, right? It's not just people moving out of urban areas, but it just in general, when people move, it creates more demand for housing and more pressures in the market to push up prices. Lower interest rates have helped too. So that's all part of it. But yeah, it generally is a sign that most people think the economy, at least in the next year, is going to be pretty good.
And the markets are rallying as well, slowly, as the country slowly begins reopening. But inflation is also a little bit on the rise. Do you expect inflation to keep rising? And if so, why? Well,
inflation it's a weird thing to measure, right? You get a lot of anecdotal stuff about gas prices or food. And I do think when the economy reopens, there's going to be a lot of things that people want to buy that they haven't been able to spend money on in a long time. And they're going to want to quickly buy it. So I think there's going to be a lack of demand of airline tickets. And there's going to be a lack of demand of rental cars and maybe some hotels and gas, right? People are going to want to drive in a way they haven't in a while. So I do think we will see prices go up in the next, say, 6 months. But this is really a supply problem. It'll erase itself pretty quickly. The thing that drives long-term inflation is wages. And if you talk to most people, unless most of your friends are CEOs, if you talk to most people and you ask them about their paycheck, it's generally not going up dramatically. And so until we see that, until we see sustained increases in wages, I don't think we're going to see much inflation.
Well, so Stephen, what are economists saying then? We just talked about how CEO paychecks keep going up and up and up. but it's, everyone else's are not keeping pace. So when you hear that, what does that tell you about the president's plan to tax a little bit of that? Because we know there aren't that many CEOs in the U.S., and they seem to be doing pretty well. The president says it's fewer than half of 1% of Americans that are going to get this tax increase on their capital gains. So when we hear that the wealth disparity keeps growing, doesn't that seem to make a little bit more sense, to tax that tiny, tiny upper echelon a little bit more?
Yes. I mean, I think the tax increases are generally pretty popular. And I think this is probably a piece of, it's not great news for the way that companies set their incentive structures, but it's probably good political news for the Biden team. I think that news like this, which got a lot of play recently, and we'll get more as more and more companies announce this, the news like that helps the political drive to raise